In this video, we're going to talk about the nature of mergers and acquisitions. Mergers and acquisitions, or M&A, is a general term that describes the consolidation of companies or assets through various types of financial transactions. The terms mergers and acquisitions are often used interchangeably, but they differ in meaning. Acquisition happens when one company takes over another and establishes itself as the new owner. A merger describes two firms of approximately the same size that join forces to move forward as a single new entity rather than remain separately owned and operated. Mergers can be structured in a number of different ways based on the relationship between the two companies involved in the deal. Horizontal merger happens when two companies that are in direct competition and share the same product lines and markets merge. Vertical merger happens when a customer and company or a supplier and company merge with each other. Think of an ice cream maker merging with a cone supplier, for example. Congeneric mergers happen when two businesses that serve the same consumer base in different ways, such as a TV manufacturer and a cable company, for example, merge. A market extension merger happens when two companies that sell the same products in different markets merge to make it a stronger presence together. A product extension merger would be when two companies selling different but related products in the same market merge to offer its clients new product lines. And conglomeration happens when two companies that have no common business areas merge anyways, because there is a vision that this merger would be beneficial for the parties anyway. Mergers may also be distinguished by following two financing methods, each with its own ramifications for investors. Here are the examples of the biggest M&A transactions in history. As of January 2021, the largest acquisition was the takeover of M&As by Vodafone, occurred in 2000 and was worth $203 billion. Vodafone, a mobile operator based in the United Kingdom, acquired M&As, a German-owned industrial conglomerate company. This deal made Vodafone the world's largest mobile operator and set the scene for dozens of mega deals in the mobile telecommunications space in the years that followed. This is the largest mergers and acquisitions transaction in history. The second largest is AOL and Time Warner merger in 2000, which was a $182 billion transaction. Well, big transaction doesn't always mean a better transaction. In little over 2 decades, the deal has become cemented as the textbook example of how not to conduct M&A. It featured everything from overpaying to strong cultural differences, and even, with the benefit of hindsight, two large media companies who just weren't sure where the media landscape was headed. Some examples of smaller but really successful mergers and acquisitions would be, for example, Facebook and WhatsApp acquisition in 2014. WhatsApp was purchased for $22 billion. Although many would say that Facebook overpaid for WhatsApp, the fact that the platform has 70 million users in the US alone have proven them wrong. The app also provides potential for Facebook to bring more businesses onto its advertising program, with thousands of businesses coming onto the platform every day. And another famous transaction that happened very recently is Salesforce and Slack acquisition for $27.7 billion. It looks like a winning combination. The deal is the second biggest of all time for a software company, the largest being IBM's acquisition of Red Hat in 2019. But it already looks like it has the potential to generate massive synergies for both companies. Time will tell, but this one looks like it could be a winner. Very often, M&A transactions are not successful though, and there could be many reasons for that, such as cultural differences, inability to implement the merger properly, and so on and so forth. So when considering an M&A transaction for the company, you need to consider many different factors, not just financial situation of the companies.